Joining us now, former Council of Economic Advisors Chairman Jason Furman here at Post 9. What a treat. Good to see you.
Great to be here.
Is it your expectation that we'll have a shutdown?
I think that's the most likely scenario at this point, and it's just terrible. Back in June, they all agreed on spending levels. I didn't think this would happen, but here we are.
Here we are. So now the question is how long it could last and how much damage could be done.
Look, I think the one thing here is there's not a big existential disagreement among the vast majority of them as to what spending levels should be. The president agrees, both parties in the Senate agree, the Democrats in the House agree, and I think the majority of House Republicans agree as well. So there is a solution here. There's no reason it has to be long, but with them, you never know.
I do wonder if the market is starting to get spooked, not so much about the economic impact of the shutdown, but the fact that we could get downgraded again. Moodys warning that it's the dysfunction that could potentially lead to another credit downgrade.
Yeah. Look, I think the United States is good for its debt. We're going to pay our debt back. But I don't blame people for taking a look at us, looking at this dysfunction. And by the way, we do have some big problems with our deficit. A government shutdown is not the way to solve them. Discretionary spending isn't the way to solve them either. They need to sit down at some point and have a real conversation. It's hard to see, where and how that's going to happen. But for now, they have a much, much easier job. Keep the government running.
I think it was J.P. Morgan earlier in the week that said the United States has lost its exceptional funding ability. And I wonder if you think this broad picture explains what rates are doing beyond what's happening with prices around the country.
Look, I think most of the rate increase is that the market increasingly believes what the Fed has been saying for a while now, which is that rates are going to stay higher for longer. Some of those recession fears receded. They're creeping back a little bit, but only a little bit. So I think most of it is the macro dynamic, but certainly our fiscal situation can't be helping. And it's, of course, a vicious cycle. 4.5% long-term borrowing, higher deficit means higher interest rates, and that's the dangerous place we might be heading into.
But do you think the administration gets some blame for the fact that, look, these programs aren't cheap, they're all starting to hit inflation reduction? I mean, they're going to require a lot of debt to be issued. The Infrastructure Act, the CHIPS Act, it's all coming.
Look, the main things that added to the deficit are infrastructure and chips. Those are actually done on a bipartisan basis. So I think, everyone in Washington bears some of the blame. I think these were good programs. They were important to do. I wish all of it had been paid for. Regardless, we can debate how we got here. But the most important thing is to do the easy thing now, fund the government, and then sit down, have a conversation. And that conversation should be about entitlements and taxes. Those are the two big pieces here, not this discretionary spending.
But is this time different? Is this a time where bond vigilantes should be worried about the U.S.? Because it hasn't really mattered before. We're the reserve currency. Everyone wants our debt.
Look, I think they should be a little bit worried right now. And you're seeing, I think, some of that worry in bond markets. And there could be more of it. There's no reason long-term rates can't continue to go up from here.
Wow. Remind me of the debate right now regarding your view on the target. Is your view that it should be softer than it is, or that they should be more resolute?
Look, I think the first thing the Fed needs to do is get inflation under control. When it does, at the next framework review, I'd shift the target to something like a 2 to 3% range. But I do it in a hawkish way. I think they have to emphasize inflation. They can't lose their credibility. Does that look like where they're headed right now? Probably not. But I think it's good to say what I think the best idea out there is.
Do you think that's gotten any traction?
If anything, it's gotten reverse traction as people have dug in on the opposite side.
Powell's poo-pooed it a lot.
But we'll see what they do. If they get inflation to 2.8, I don't think they're causing a recession to get from 2.8 to 2.0. I think the last mile is harder. I think everyone will calm down and relax if they see a 2 in front of the inflation numbers.